Good morning, restaurant owners, and welcome to this week's live Facebook training. My name is Tim Cernett. I'm a CPA and the founder of Financial Optics, where we help independently owned restaurant operators improve profits and cash flow through financial clarity, actionable financial insight, and strategic foresight. So I read something the other day that was really rather astounding. And I had to do a double take to make sure that it was from a reputable source. Last year, according to the National Restaurant Association, I think we can all agree a pretty reputable source, more than 4 in 10 restaurants in this country last year did not turn a profit, 42%. Those are people pouring their lives into their restaurants. And at the end of the year, there's nothing to show on the bottom line. But here's the thing, I don't really think it's a matter of effort or hard work. Nobody works harder than restaurant owners. The deal is right now in 2026, food costs are running about 1/3 higher than they were before the pandemic. Traffic's been soft in certain areas of the country in 2026, and margins are getting squeezed from every direction. Now, before I go any further, let me share my screen and start the slideshow. Okay, present. And let's get back to what we were talking about. The average independently owned full service restaurant is operating at a 3 to 5% net profit margin. Some are lower, some are breaking even, and according to the statistic we just saw, 42% are not even showing a profit. But some don't actually know where they stand, which might even be a scarier proposition. Meanwhile, well-run operators, and I'm not talking about massive chains with corporate infrastructure. I'm talking about independent operators who've gotten their financial systems right, are hitting 8, 10, 12%, or even better. And now that's not a small gap. On a $2 million a year restaurant, the difference between 4% and 10% is $120,000 a year to the bottom line or into your pocket. Same restaurant, same market, same challenges, different systems, different decisions, better decisions because of better information, different outcomes. Everything we do at Financial Optics comes down to one thing: accelerating the prosperity of independent restaurant owners. And that means helping you land on the right side of that gap. Certainly not in the group that didn't make any money last year, but in the group that's building something profitable and built to last. So in the next 15 minutes or so, I'm going to walk you through the 5 moves that create that gap, and more importantly, how you can start closing in on the gap. These aren't secrets, they're disciplines, and every one of them is within your reach. Getting the accounting system right, building a financial plan that works, controlling prime cost with a weekly discipline, engineering your menu for profitability, and mastering cash flow. So let's get right to it. Move number 1, getting your accounting system right. Your accounting system is the foundation of everything else that everything else is built on. If it's wrong, everything downstream, your food cost numbers, your labor analysis, your cash flow picture, all that's unreliable and not a source to help you make good decisions. So, custom chart of accounts. Your chart of accounts needs to be built for a restaurant, not a generic small business. You need to see sales broken out by food, beer, wine, liquor, non-alcoholic beverage. Cost of goods sold should be broken out in the same way so you can compare food cost to food sales, wine cost to wine sales. You need back of house and front of house separated so you can analyze those cost centers. And if your chart of accounts doesn't give you this level of detail, your financial statements can't tell you where the problems are. Secondly, a cloud-based accounting hub, QuickBooks Online or an equivalent as your centralized financial command center. That will give you or help give you real-time visibility, not reports that show up 3 weeks or after later or after the month closes. An integrated tech stack. This is what gets you closer to real-time visibility into your financial performance. Your point of sale system, payroll, bill pay systems, they need to be connected to and talk to your accounting system, that accounting hub. If you're manually entering data from one system to another, you're wasting time, introducing the possibility of errors, pretty much guaranteeing errors if you're manually entering data, and losing the speed advantage that technology is supposed to give you. Now, we're going to go much deeper into financial systems and technology integration later in this training series. For now, just know this: if your numbers aren't real time and restaurant specific, they're not helping you make decisions. They're just compliance documents for your tax return. Okay, move number 2. Build a financial plan that works. A financial plan, what some people would call a budget, is your restaurant's GPS. Without one, you're driving without a map and hoping you end up someplace good. So, what do I need by a financial plan? You start to define success for your restaurant when you have a financial plan in place, not some generic benchmark. What does success look like based on your concept, your price point, your market, your values? More cash in the bank, higher profit margins, reduced personal stress, whatever your values are, better work-life balance, they all start with building a financial plan. It needs to be a 12-month rolling operating plan, reviewing the last 12 months of actual performance and projecting out the next 12 months, starting with revenue by category, then prime cost, then overhead. This is your roadmap, a 12-month rolling plan, not something you prepare in November, December, or January for the upcoming year, and then you don't look at it again for another 12 months. This is something you're reviewing every month with a cadence of analyzing what's happening now in our restaurant. So set KPIs and targets and track them. That's part of your financial plan. If you don't define what good looks like for each line of your operating plan, you have no way to measure whether you're winning or losing. Set achievable targets, stretch targets, but achievable targets, then track your actual results against those targets. Now, building an operating plan that actually works for your restaurant is its own training. You're going to see a trend here. I'm going to keep referring to future trainings to go deeper into these 5 moves to get into the granular detail level. So just trust that the takeaway today is that you're making decisions in the dark if you don't have a financial plan. And we're going to dig into how to build that financial plan in a coming week. Now, move number 3. Control prime costs with weekly discipline. Prime costs: food, beverage, wine, liquor, and your labor costs, front of house, back of house. Those are your prime costs. And that's where the money is. This is where most restaurants can find 25,000 to 100,000 in hidden gains. If you're doing at least $1 million a year, that is easily doable if it's something that you're not working on hard every week right now. And it comes down to simple tools used consistently. Food cost tools, inventory systems. You have to have an inventory system in place. Otherwise, you're just guessing on what your costs are. Waste tracking, key item tracking, weekly sales projections, sales per labor. These aren't complicated. They're just required consistency. And consistency is what separates the restaurants making 10% from those making 4% or less. Labor cost controls, staffing guidelines scheduled based on productivity data, shift management, manager shift cards. Ideal labor isn't the cheapest labor, it's the fewest hours that produce the best guest experience consistently while maintaining profitability. A weekly review rhythm. I touched on this. Comparing, analyzing, adjusting, repeat. This isn't a monthly exercise. By the time you see the problem on a monthly P&L, you've already lost 3 to 4 weeks of margin. So we start with building a detailed monthly rolling plan, and then we start to work on breaking that down into weekly bite-sized manageable bits. So the week reviews catches problems while you can still do something about it and not waiting 3 or 4 weeks to see the problem. So let's put this into some dollars that make the math real. If your restaurant is doing 1.5 million annual revenue and you drive your food costs down by just 1 percentage point, that's $15,000 straight to the bottom line. Do the same thing with labor, that's another 15,000 to the bottom line. $30,000 from two tiny improvements, 1% improvement in each. And you're capable of much more than a 1% improvement if you have the plan and the tools in place. So we've got a dedicated training. You're seeing the theme here on food cost and menu engineering, labor strategy, and labor budgeting coming up later in this rotation. Each one goes deeper into the practical tools and the systems. Today, I just want you to see how they fit together. And because prime cost control isn't one thing, it's a system of disciplines working together and the impact it can have immediately on your bottom line. All right, move number 4. Engineer your menu for profitability. Every dish on your menu should earn its place. Menu engineering is where financial clarity meets operational execution, and it's often where the biggest hidden profit lives. Detailed recipe costing, you need to know the exact cost of every plated item. Not an estimate, not a guess, the actual cost based on current ingredient prices, not the prices you paid 3 months ago, and the yield and the portion size. And if you don't know what a dish costs to put on the plate, you don't know what it's contributing to your bottom line, which leads us to contribution margin over food cost percentage. Most owners focus on food cost percentage. I'm guilty of that too. That's the first thing I look at when looking at financial statements. That matters, but contribution margin, when analyzing your menu profitability, the actual dollars a dish puts toward paying your bills, that tells the real profit story. A $28 entree with a 35% food cost contributes more dollars to your bottom line than a $14 appetizer at 25% food cost. Now, when you might look at those and say 35% food cost, we need to work on improving that. Let's stress the appetizer at 25%. Well, the contribution margin on the entree, the dollars it drives to the bottom line, that's what matters to your bank account. Menu mix analysis. What's actually selling and what I didn't forget portion control. We're going to talk about that last. What's actually selling and what's each item contributing. So the volume over a period of time, how many times is that entree selling and what is it contributing to the bottom line in contribution margin dollars? You're going to have stars, workhorses, puzzles, and dogs. We'll go into this deeper in a later training, but once you see your menu through that lens, the strategic decisions become obvious. What to promote, what to reprice, and what to retire from your menu. Portion control. Once you've gone through detailed recipe costing, contribution margin, menu mix analysis, portion control is the discipline that drives it all home because it's also, if you're undisciplined on portion control, can blow everything else out of the water. A 10% overportion on a dish with a 30% food cost pushes that dish to 33% food cost and erodes the bottom line dollar contribution margin. Multiply that across 1,000 plates and you're watching margin walk out the kitchen door. Here's the theme we're building on. Menu engineering is one of the most powerful profit levers you can have, and we'll dedicate an entire training to it. For today, just understand that you have to know your recipe cost and know your contribution margins and make sure your team is executing on portions consistently. Okay, move number 5, the last move, mastering your cash flow. Profit and cash flow are not the same thing. You can be profitable on paper and still run out of cash. I've seen it happen many times. It isn't bad luck, it's bad planning, and you can fix that. It requires not just looking at your profit and loss report, your P&L, your income statement, it's balance sheet awareness. That's the other major financial statement. Most owners live in their income statement and never look at the balance sheet. Well, that's where the cash lives, and that's where there's major levers affecting cash flow. And that's where debt lives, which is one of the big levers on cash flow. That's where your full financial picture comes into focus through the balance sheet. Cash reserves discipline. Your restaurant needs a cash cushion. You can't be continually managing on a week-to-week basis to end up with a close to zero bank balance. Not because things will go wrong, but because things will get unpredictable. They always do in the restaurant business. Seasonal swings, equipment failures, supply chain disruptions. Cash reserves are what keeps those moments from becoming a crisis. Strategic financing. Not all debt is bad. Equipment that drives productivity, strategic expansion, infrastructure upgrades, these can be smart investments, but high interest credit cards, merchant cash advances, what a terrible thing. Borrowing to cover payroll, that's a different story. And knowing the difference is part of the financial mastery. And we'll dig into cash flow mastery and debt management in dedicated trainings later in the series. There's the theme of today. So let's bring it all together. Here are the 5 moves one more time. Get your accounting system right because everything starts with reliable numbers. Build a financial plan that works for your restaurant because you need a destination before you can navigate towards it. You need to know and have a vision of prosperity for your restaurant in 3 months, in 6 months, and in 12 months. And further, if you want to go into annual planning. Control prime costs with weekly discipline because that's where the hidden profit lives. Engineer your menu for profitability because every dish should earn its place on your menu. Mastering cash flow because profit on paper doesn't necessarily pay the bills. These aren't 5 separate things, they're a system. Each one supports the other. When they work together, you get financial clarity, and financial clarity is what turns your hard work into real, lasting prosperity. Okay, now, if you're listening to this and thinking, I'm not sure where I stand on some of these things, first know that you're not alone, and that's a valuable realization. Most restaurant owners know they have gaps in their financial system. They just aren't sure where, and they haven't had a clear way to see exactly where those gaps are. That's exactly why we created the Restaurant Financial Systems Scorecard. It's a free self-assessment of that walks you through the key areas of your restaurant's financial infrastructure, your accounting setup, your prime cost visibility, your planning, and your cash flow systems, and shows you where you're strong and where the gaps might be and where you might be losing money in your restaurant. It takes about 10 minutes. And when you're done, you'll have a clear picture, high level clear picture of where your restaurant stands financially. Not a guess, but an actual score across the areas that matter most to your profits and cash flow. Below this video, I'll drop a link in the comments that will lead you to a download of the scorecard to see where you stand. I think you'll find it's one of the most useful 10 minutes you spend on your business this week. Do it this week. Also, you might just be thinking, I simply want to schedule a time for a short call to talk to me and talk through some of these issues. I get it. And for that, I'll also leave a link to my calendar if you would like to schedule a call. I prefer a Zoom meeting. So next week, we're going deep on move 3, food cost control. Going to walk you through the simple tools that unlock the hidden profit in your kitchen without cutting quality or changing your menu. That's some valuable information. So I'll see you next week. Thanks for joining me again this morning. I love talking to independently owned restaurant operators. You're doing something incredibly hard, and it takes real courage to follow through with your convictions and your visions of prosperity. Have a great week, everybody, and we will see you next week.